Very good evening, friends. Let's quickly take a look at two questions, one from essay 620 and one from essay 501, because these are the questions where you tend to skip through, and if it comes in exams, then I don't want you to miss out on these questions. The first one is X Limited had a net worth of rupees 1300 crores, because of which Ind AS become applicable to them. The company had various derivative contracts, options, forward contracts, interest rate swaps, etc. This is not AFM, so but this gives you a chance to recall these topics in AFM parallelly as well. You can do that after we discuss this question, which were required to be fair valued, for which company got a fair valuation done through an external third party. So this is the scenario, and the statutory auditors of the company involved an auditor's expert to audit valuation of derivatives. The auditor and the auditor's expert were new to each other. That is the catch. That is, they were working for the first time together but developed a good bonding during the course of audit. So that gives an indication that audit lasted for quite a while. The auditor did not enter into any formal agreement with the auditor's expert. Please advise. So the relevant standard in this case, as you most of you would have got it right, is SA 620. So SA 620, using the work of auditor's expert, the nature, scope, and objectiveness of the auditor's experts' work may vary considerably with the circumstances, depending on the roles and responsibilities of the auditor and the auditor's expert, and the nature, timing, and extent of communication between the auditor and auditor's expert. So, in the below scenarios, various scenarios, a written detailed agreement is required. For example, let me give you a situation that experts will be having access to confidential data, in this case valuation, any undisclosed public information items, because to arrive at a conclusion he might have access to it. And just an example I'm telling for your understanding, after 3 months the experts might feel the work is very burdensome, so he might tell, I cannot complete the work, so I'm leaving. So these are the various scenarios. Now let's connect with this case. So what are the 4 points you are expected right as per SA 620 is, first one is auditor's expert will have access to sensitive or confidential entity information. So that is the first point I told. Next is the matter to which the auditor's experts work relate is highly complex. So that is the second one, that is he might run away and all those things. So in the agreement it should be clearly mentioned that force majeure clauses will be there, where if he does not complete the work then huge penalty will be imposed by the management. Next is the auditor has not previously, this point you would have got from the question itself, because question specifically states the auditor and the auditor's expert were new to each other. So the auditor has not previously used work performed by the expert. Lastly, the greater the extent of the auditor's expert's work and its significance in the context of the audit. So these are the various scenarios in which a written agreement is required, and in this case, given the complexity of the valuation, it is a must to have detailed written agreement. So this is with regarding to SA 52620. Moving on to the next question from SA 501. GHK Associates CA conducting the audit of PBS Limited, a listed company for the year ended 31st March 2024, is concerned with the presentation and disclosure of segment information included in the company's annual report. So GHK wants to assure that methods adopted by the management for determining segment information have resulted in disclosure as per applicable financial reporting framework. So guide GHK with examples of matters that may be relevant when obtaining an understanding of the methods used by the management with relevant to the reference to the relevant standards or on auditing. So the relevant standard is SA 501. So what are the various 4 points for this particular answer? What are the various examples of matters are sale, transfers and charges between segments, and elimination of inter-segment amounts. So this is the first point. Next is comparisons with budgets and other expected results. For example, operating profits as a percentage of sales. Next is allocation of assets and costs among segments, various segments, for example, external segments, internal segments, all those aspects. Lastly, ensuring consistency with prior periods and adequacy of the disclosures with regarding to inconsistency. So let's quickly recall the key terms. First is sale, transfer and charges. Then the comparison with budgets and expected result. Next is allocation of cost and assets. I repeat, cost and assets among segments. Lastly, consistency with prior periods and adequacy of the disclosures with respect to inconsistencies. That's it. Hope all of you followed, make full use of it. Note on the key terms so that you don't miss out on these questions, because it's a minute question where you feel like repeatedly recalling the exam day. There is a main objective again sharing these things. Keep going, best wishes.